Now let's see if we can talk about the valuation question. How does this rate outlook fit into valuation conversations? I think we go back to a much more simpler and fundamental question. What is a business truly worth? There are two parts to this question. I think the first part is, as long as dollars in, money coming in, is greater than dollars out, money going out, you have value, especially in the current environment. I think the second part of this equation is your future growth rate has to be higher, has to be bigger than your current growth rate. If your outlook indicates that's the case, you have value. Two models. One, dollars in greater than dollars out. Two, future growths greater than current growth. If you can meet these two criteria, you have value. Now, in a normal cycle, investor payout is a function of a number of parameters. The first is payout, right? If and when we do everything that needs to be done and we hit an exit, what's the amount of payoff we'll receive as investors? I think the second is probability of success. The third is the discount factor, your IRR or hurdle rate. Fourth is future dilution. How much more capital do we need to raise? Fifth is consumer traction. How easy is it to get consumers to come and buy a product? And the sixth item is the stage of economic cycle. Where are we? Are we heading towards a peak? Are we booming? Are we in the boom? Are we heading to the boom? Or are we going towards the bust cycle? So 6 factors. Payoff, higher, better. Probability of success, higher is better. Discount factor, lower is better. Economic cycle, growing is better. Consumer traction, easier is better. Future dilution, lower is better, right? These are your drivers. But when you enter times of stress, such as these, you're no longer in the economic cycle and the equation changes. They're still the same parameters, but your payoff is lower, your probability of success is lower, your discount rate is higher, your economic cycle is heading towards a crash, adjustment, collapse, or a bust, which leads to lower risk appetite. Consumer traction is affected because people no longer have the discretionary income available, spending power available that they had earlier on. And you're likely to dilute more because the amount of capital you had is not going to be sufficient for you to break even or get to or reach the positive cash flow milestone. So a down cycle, valuations don't go down just because rates are higher. Valuations go down because all of these factors shift from blue and green into red. So you have to remember this. The down cycle is not just a function of the IRR. The down cycle is also a function of outlook and expectations. Which then brings us back to something that I hinted earlier. What do you do as a founder? What choices do you make as a founder? The ideas you select and work with, the quality of ideas you select and work with becomes exceedingly important. How much a customer worth is a function of the spending power, discretionary income of those customers. How big is the market and projected share is a function of your ability to crack that market and your competition. How much are you worth is a function of where valuation multiples are going market-wise. And then the three questions come together to a much more important question for you as a founder. Will it be worth it under the current terms and conditions? And the answer, my friend, for most founders and startups right now would be no. Not because of what's happening to valuations, not because what's happening to markets, but primarily because of what's happening to the modeling equation for a down cycle. Focus on the quality of your ideas. One way of filtering quality ideas is to see and rank and gauge them on what kind of IRR can they generate for you as a founder, investor, partner, or stakeholder. Why worry or bother about the middle class in Pakistan? Remember this equation from our valuation cycle, the investor payout structure, payoff, probability of success, discount factor, future dilution, customer traction, stage of the economic cycle. Well, guess what? Two of these parameters, payoff and consumer traction, are directly linked to the size of your market. Within the context of the Pakistani market, the middle class is the segment that is of interest to most startups. So if you could size it properly, if you could answer a few questions around it, you could address a lot of uncertainty with respect to how big is this market and which direction is it likely to go. What's the consumer spend like? Is it growing or shrinking? These are all interesting, important questions that feed into the growth part of your valuation model. Where do we get good data on sizing the middle class in Pakistan? There are multiple sources, but the one that you're likely to see often and likely to use in your work is the Pakistan Social Lifestyle Measurement Survey 2018-2019. This is something that's been done, I think, every few years. It gets updated on a regular basis. There are challenges, there are issues, there are question marks around the data set, but it is still the most comprehensive study of household income in Pakistan. So the PSLM survey 2018-2019 is one of the key contributors to our analysis. I think the second big piece is the Pakistan census 2017. This is something that'll get updated every 5 to 10 years. The most recent set that we have is of 2017, which is about 5 years old. Beyond this, there are buckets based on the urban-rural segmentation as well as income and years of education. So we used a combination of these four sources: the PSLM survey, the Pakistani census, some data, some research indicating bucketing challenges on the urban-rural divide, city versus villages, urban versus peri-urban areas, as well as buckets based on income and years of education. So what does the data indicate? Let's take a look. For quite a few startups, the segment of interest is urban households, specifically income distribution across those segments. So what we have here in front of us is the summary of our analysis based on using the data sources identified earlier. Let me explain what this represents. The first column represents the education level. The second represents income in USD terms. The third represents total households in a specific bucket. The fourth represents the proportion of that bucket within this household group. And the fifth and final item represents the cumulative distribution. So for example, if you want to ask yourself a simple question, what is the proportion of Pakistani population that earns more than $3,500 a year, right? That would represent this specific segment. So more than $3,500 includes the $3,500 bucket, inclusive, the $6,000 bucket, the $9,000 bucket, the $34,000 bucket, and the $94,000 bucket. So this, and this, right? So what does this represent as a proportion of the total population? There is your answer. Just the $3,500 bucket is about 23%. The $6,000 bucket is about 13%. The $9,000 bucket is about 10%. The $34,000 bucket is about 5%. And the $94,000 bucket is a very small 0.03%. If you add this plus this plus this, these three, and then this, you would find that all in all, this represents, so this is 23 and 13, which is about 36, and 10, which is about 46, and 5, which is about 51, and then 0.03. So the proportion that represents more than $3,500 per year in income is about 50+% of the Pakistani urban middle class households, of which the thickest segment is the one that we start off with, which is people who earn more than $3,500 per year in annual household income, but less than $6,000, right? It's about 23%. Then the second segment, the second largest segment, are those who earn more than $6,000 a year, but less than $9,000. And the third is those who earn more than $9,000, but less than $34,000. And then the final segment are those who earn more than $94,000 a year, right? So this gives you a sense of the slice. And then on this side, this represents number of households. In our model, I think we've used an average of about 5 individuals per household. So 2.8 million households is not individual, it's households. So if you take that, if you round it up into 3, you're basically saying there are about 15 million individuals in Pakistan who live in households who earn between $3,500 to $6,000 a year in annual household income. So that represents a profile of urban households. Here's the same data presented in a more visual format. Each of these bars, the blue bars, represents the count of households in that specific bucket. People who earn less than $300 a year in annual income, urban households in Pakistan using the PSLM 2018-2019 dataset is about 700,000 households. The one that represents $3,500 a year is about 23% or 2 million households. The one that represents 6,100 is about a million households. The one that represents 9,200 is about 800,000. And for most markets, for most groups, for most startups, for most teams, the segment of interest is the $3,500 plus segment. Gray line that you see here is your cumulative distribution, right? So it adds up to 100. And the orange line that you see here represents what proportion each bucket represents of the overall total distribution. So this is fine and well. We've got a distribution, a numerical distribution of urban households in Pakistan. We've got a visual distribution of urban households in Pakistan. But how do you make sense of this data? What's the most interesting question you could ask yourself using this data set? I think for us, the biggest question was, is the middle class growing? Is it upwardly mobile? One way of answering that question is to take the same data set, the PSLM data set from 2007 and 8, and compare it with the data set in 2018-19. What we've done here is we've done a distribution plot of the PSLM 2007-2008 data set, and we've plotted it against the 2018 data set. And even though this is not an exact match, but you can see a couple of reference points, right? So you can see that in 7 and 8, the lowest number, the lowest threshold that we'd set up in terms of formatting was about 167, which corresponds essentially to this bucket here, right? 167. The midpoint of the distribution where, the biggest chunk resided in 7 and 8 was about 1667. So about $1,600. The center of the distribution in 18-19 has jumped up. It's doubled up to about $3,300. And remember, here, the relevant exchange rate at which you would converted PKR income into USD was about maybe 60 plus. Here in 1890, it's likely to be about 120 plus. So this is the USD PKR exchange rate that was used to convert and plot this data set into USD terms. And this is the USD PKR rate that was used for this specific presentation. So this is dollar adjusted income. And as per the PSLM data set, you can clearly see that even adjusting for inflation and the depreciation in USD PKR exchange rate, there has certainly been a shift. The distribution is moving on this specific side. The other thing that you can see here is that this is also more widely distributed. This is sort of like a broader distribution compared to the distribution that we saw in 2007 and 2008. There are two parts of this question. Is the middle class growing? So are absolute numbers going up and increasing? And the second part of this question is, and this is the more interesting part, is it upwardly mobile? This graph on the face of it suggests that it is. It is both growing and upwardly mobile, but what do the exact numbers look like? And that brings us to our next plot. The next plot is the two charts that you've seen represented in a tabular numerical form. So I've got two pieces, I've got the PSLM data set, I've got the frequency over here. I've not mapped this data to census data. I'm just looking at PSLM data set. Within the PSLM data set, there has been a couple of changes and transitions in the sense that, the overall sample size has increased over the last 20 years. So you can't actually do a like by like or a side by side comparison. But what you can do is look at the relative distribution. So for example, if you look at this number, the $3,333 segment, and this corresponds to an exchange rate of USD PKR of about $60. The same segment, this 3,333 here, corresponding to a USD exchange rate of 120. Look at the proportion and look at the part of the distribution that lies above or beyond. In 7 and 8, about 85% of the population lived below $3,300. In 1890, that number is down to about 74%. So the distribution's moved up. Look at it from a different perspective. In 7 and 8, 85% of the population earned less than $3,000, and 14% of the population earned less than 14% of the population earned more than $3,000. In 1819, 74% of the population earned less than $3,000, and 26% of the population earned more than $3,000. Look at the $6,000 segment, 6,667. 8, 7 and 8, 96% earned less, 3.5% earned more. In 1819, it's 94% and 5.89%. So when you think in terms of percentage distribution, you can see that each segment is growing as part of its overall contribution, as part of its overall composition within the distribution of urban middle class household. The proportion of households in a given segment have increased over the last 10 years. Look at the change, the percentage change in a given segment. That'll give you a better indication of where the biggest growth has occurred in the last 10 years. And that's our next plot. So here we've got three plots, three lines, three curves. The first, the blue line, this line that you see here, represents the contribution, the proportion of the population that was in a given bucket. So for example, 82.38% was essentially in the $833 bucket, right? In 07, 08, 82.38% of the population earned more than $800. 1819, which is the orange line, this line, right? This line. In 1819, 92% of the population earned more than $833, right? And what's the relative change? So the green line, the green plot plots the percentage change in the category over that time frame. So about 12%. So 12% of the population has sort of moved into a higher category. Second question, what about $1,667, that bucket, right? In 07, 08, about 45% earned more than that. In 1819, about 65% earned more than that. And what's the jump? The jump is about 45%. But the biggest movement is here. In the $3,000 plus category, 14% of the population in 08 earned $3,000 or more. In 1819, it's 26%, and this is about 85% relative growth. 65% in the $6,000, 43% in the $10,000 chunk. So if you look at the biggest chunk of growth, and this is the good news about Pakistan, the biggest chunk of growth in the last 10 years has happened in the middle segments, from $1,600 to $10,000. Think about this for a second. What does this represent? It's not just that the absolute numbers of the middle class are increasing because population is increasing. More importantly, there is upward, significant, substantial documented upward mobility within each segment across the class. And the biggest movement, the biggest mobility is happening in the classes that matter the most to the long-term economic potential of this country, the urban middle class. But the good news doesn't end here. There's more. And the final part, the brightest part of our analysis and the data set, both on the PSLM side and on the census side, is what's happening to working women. So what we did was we looked at one specific segment, and this is a segment of interest to a specific product profile. The segment is urban Pakistan, age greater than 40 years, education 12 plus year, annual household income about $6,000, right? So if you look at the profile of men who fit these demographic attributes, you'll find that as per the numbers we're looking at right now using the census in 2017 and the 1819 PSLM data set, there are about 900,000 households, just under a million households, where men represents this segment. Age 40, 12 plus year of education, annual household income of more than $6,000. And over a 10-year period, so right now it's 18-19, in let's say 28-29, 10 years down the road, they will grow somewhere between 10 to 20% in a 10-year time frame. So the same number, the same segment, the same households in 28-29 would somewhere be about maybe about 1 million to 1.1 million households. And then, they'll grow at the same rate, at the 10, 15, 20% rate every decade for the next 10 years and the 10 years after that. So if you extend this analysis, they'll be about in 10 years, the first decade, 20 years, and in 30 years. So A decade down the road, there'll be about 1.1 million households. Then a decade after that, there'll be about maybe 1.3 million households. And then a decade after that, there'll be maybe about 1.4 million households, right? That's the profile of men in this specific segment. Now, the brightest piece are working women employed. Same profile, age 40, 12 plus years of education, $6,000 a year in annual income. Right now, the number of households that have this profile is about 154,000 households. Mostly adult income. Question is, what would this profile be in 2030? So about 10 years down the road. And that's the brightest piece. They're not growing at 10, 15, 20%. They're doubling up. So right now they're about 154 right now 154. 10 years down the road, they'll be about 300K. 20 years down the road, they'll be about 500 to 600K. And then another 10 years down the road, they'll be close to about 1.2 million households. So the promise of the middle class, the real promise of the middle class is in twofold. One, the Pakistani middle class is upwardly mobile. Pakistani middle class is growing. But the most important segment of growth in that profile is essentially allocated to the growth of working women in our country. And what this basically means is that as women participation in the labor force increases, you're likely to see a substantial, very strong boost in productivity that had been missing over the last 20 or 30 years in our history. Project that forward, and you'd understand why the profile of the middle class and the drivers of growth within that middle class are so important to your financial model, and why this represents the best possible news we've seen in a long time. Yes, rates go up and down. The outlook on that front is very, very dark, but it's partly offset by what we're seeing at the household level, urban household levels in Pakistan. Not just now, not just over the last 10 years, but specifically looking forward over the next 10, 20, and 30 years. The bet that you want to make is not a bet on history. It's not even a bet on the present. It's a bet on where these specific segments are going in the next 30 years. Question is, are you going to sit and watch from the sidelines, or are you going to write these stories together with these consumers and customers? Given the darkness of news we've seen over the last 10 years around Pakistan, it's quite natural to ask, Jawwad, hey, thank you so much for sharing all of this, but do you actually have any external validation for this data, for these trends outside of the information you've shared? And the answer there, once again, is yes. So this is one of my favorite plots. What I've done is there is something called the SBP Payment System Reports. It comes out once every quarter. And there is a fairly long history of that report. You can go to the SBP website, look at payment systems or payment system department, or look at payment system statistics, and you'll find that report. And what that report essentially shows and tracks is what's happening on the payment system side, right? So what I've done is I've taken a trend from 2019 to 2022. So essentially about 2.5 years of data. And let me walk you through what I represent. So what I've done is I've focused my analysis on what I call mobile phone banking users. State Bank tracks internet banking users and mobile banking users. If you're a large corporate customer, if you're a large commercial enterprise, if you're even an SME and you use internet banking with your customer, there's a reasonable chance that the work that you're doing is essentially on the internet banking portal. But mobile banking users tend to be retail consumers. So we're going to assume that mobile banking data represents consumer data. There's possibly room for adjustment in that analysis, but the trend I suspect would hold. Q1 2019 represents essentially July to September 19. This is October, November, December 19. This is Jan to Feb 20. And then this is, Jan to March 20. And this is April, May, June 20. This is July to September 20. This is October to December 20. This is 21. This is 21. This is 21. This is 21, and this is 22. So the last data set is essentially Jan to March 22. This is the most updated set that I was able to find as part of my work. before the conference happened, right? So that's the first part. So the blue bar, this bar represents mobile phone banking users, and this bar was essentially, if you track this here, this goes here. It's about, say, about 6 million plus users when we start our analysis, and tapping out at about 12 million individual users, right? Now, these are not unique users. So, for example, if you're thinking in terms of households, there is a reasonable chance that you may have up to 2 to 3 mobile banking users in a given household, which would basically mean that in terms of unique users, this would still add up to somewhere between, if you do 3, maybe about 4 million unique individual households. If you do 4, maybe 3 million unique households. If you do 2, about 6 million individual unique households, right? That's the first part. I think the second part, the orange line, is the value transacted per user per month. So when you started your analysis, the number was about 15,000 rupees per month per user. When you get to Q3 2022, that's about 85,000 rupees per month per user. So if you assume there are 2 users per household, which is 6 million unique mobile banking users, this number would be about 47,000 rupees per month. 47,000 rupees per month, if you just round it up to 50 times 12, is about 600k, 600,000 rupees per annum. So 6 million users are spending 600,000 rupees per year. How does this match to our segment here? If you go back to our data set, there you go, 600,000. 600,000 at the old exchange rate of 120 is about $5,000, and represents about 89% of, so represents about 11% of the Pakistani population falls in this specific segment as per the PSLM data set. If you go back to our distribution, 5,000, so somewhere around here, let's take this number, right? It's about 1 million households. It's 1 million households as per, not 1 million, it's 1 million plus households. So 1 million, 2 million, 2.5 million, so about 2.5 million households. So the 6,000 bucket, $6,000 plus bucket, is about 2.5 million users. And if you look at the SPP data set, this figure here, that gives us a number of about 6 million households, right? So there's some room for adjustment, but at least from a trend point of view, from an indication point of view, from a supportive analysis point of view, you can see that the numbers are not too unrealistic. There is evidence, there is need for a proper, formal, deeper, investigative study, but high level, I think the trend is supportive. That's one. In case you're wondering what does the data look like, here's a summarized presentation of the SBP payment system report extracted from July to September 2019 to about Jan to March 2022. So you can see, this is 11.98, 12 million users. Beyond the SBP report, are there additional data points that you can look at? FBR publishes a salaried taxpayer distribution. You can take a look at that. I think the last publicly available data set is 2018. There's also an association of person returns, so individuals who are filing as non-incorporated individual persons partnerships and other informal forms of businesses. So that's 2. You can also look at household electricity bills. So unit consumption, average unit consumption per month can give you a sense of the expense and consumption data. I think NEPRA has this data on their website. I haven't looked at it, but it has been suggested. And I think that's the next part of our analysis. You can also look at about unique credit card holders. Depending on who you ask, the numbers between, I think, 1 million to maybe about 1.8 million credit card holders, automobile owners above a certain size, O and A level students as an indication of the underlying urban households where these children come from, where these students come from. Actually dig out the data, use that data to document the profile of the middle class. And the more well documented the middle class is, the stronger the case for your market size, and your startup in Pakistan. So where is this going? How does a more prosperous, growing middle class translate into our available labor pool? Took this question to heart and once again built a symbol model using demographic analysis and the PBS data set to get a sense of where is the largest chunk of growth likely to occur over the next 5 to 10 years. So if you look at the 2017-18 pool, which is the blue line, this line, and you compare it with the projected pool, which is the 2024-2025 line, we build a simple population model. Once again, crude analysis, high-level analysis, scientifically based, using mortality and morbidity statistics, growth, upward mobility, a couple of other parameters with respect to where growth is likely to come from. And our take is that if you think in terms of contribution to the pool, your biggest chunk, biggest growth is going to happen in primary, then middle school, then metric, then inter. Of interest to me personally though was what's the size, what's the chunk, what's the incremental change in these two categories, which is graduate and master's student. So the numbers are higher. So, this is not looking at incremental numbers. This is looking at relative shift and change. There is some growth happening. What does that growth represent in percentage terms or in terms of net absolute numbers? Here's the second plot. So in the second plot, we're seeing that, the overall pool that has graduate education and master's education is likely to increase. So the grad pool is going to increase by about 7% over the next 5 years, and the master's pool is going to increase by about 14%. The inter pool is going to go up about 32%, and the middle school pool is going to go about 38%, right? That's the biggest piece. Some of these people will transition. So the primaries will transition to middle, the middle will transition to metric, the metric will transition to inter, and then so on. You'll see similar growth on these two sides. So in percentage terms, you can see that the biggest chunk of growth is likely to happen over the next 5 years in these two categories, which is middle and inter school. From our perspective, for my interest, I think about 7% growth in people with graduate education and 14% growth in the segment that has master's education in Pakistan. Just these three pieces together suggest that you are likely to see at least some uptake of the labor contribution of a growth equation.